What's the buzz around Ethereum? While BTC and a handful of altcoins are on a wild rally, Ethereum seems to be playing catch-up. Despite having its own pending spot ETF applications, Ethereum has been facing FUD from institutional investors, and some are even hyping up competitors like Solana. Today, we're diving deep into Ethereum's recent activities, breaking down its price action, and explaining why the long-awaited shift into ETH might be just around the corner. Before we dive in, a quick disclaimer. Nothing in this video is financial advice. It's all about educating and guiding you through the crypto world. Let's rewind a bit. It's been over 5 months since our last Ethereum update, and a lot has unfolded. The SEC's case against Ripple concluded with a ruling that secondary sales of XRP were not securities. This sent Ethereum and other Layer 1s soaring, as it seemed the SEC's grip on cryptos was loosening. It's worth noting that the SEC's attempt to delist everything on Coinbase except BTC prior to suing them was also revealed in July. Ethereum had a brief scare in August when Dydex, originally built on Ethereum, launched its DEX on its own Cosmos-based blockchain. But the tides turned when Solana announced plans to become a Layer 2 on Ethereum shortly after. Coinbase also launched its Layer 2 on Ethereum, signaling continued support. Things got a bit shaky for Ethereum in August due to a DeFi scare involving Curve Finance. As CV's price fell, concerns arose about potential contagion in Ethereum's DeFi ecosystem. Founder Michael Egorov had taken out a substantial loan against his CRV token holdings. But fortunately, he managed to sell some CRV over the counter to DeFi whales, preventing a potential crisis. On a brighter note, Ethereum saw positive developments with the launch of Shiba Inu's Layer 2, Shibam, in August. Shibam has around $1 million in total value locked and is contributing to the growing ecosystem of dog-themed DeFi protocols on Layer 2. Visa joined the Ethereum party in August by testing payments on the blockchain using the ERC-4 1337 standard. The introduction of the Paymaster smart contract allows Visa cardholders to pay for Ethereum gas fees without holding ETH directly. If you're finding this content valuable, hit that like button to show some love. Ethereum has been on a roller coaster lately, with both bullish and bearish signals causing a stir in the crypto space. Let's break down the recent events that have been shaping the narrative around the world's second largest cryptocurrency. In September, VanEck and ARK Invest made headlines as the first asset managers to apply for spot Ethereum ETFs with the SEC. This move was prompted by the SEC's imminent approval of a spot Bitcoin ETF. However, Ethereum faced a setback when on-chain analytics revealed a surge in active wallets, fueling speculation of an impending rally. Unfortunately, this momentum was interrupted by some unwelcome FUD. Ethereum's new testnet, Whole Sky, faced technical glitches, and JP Morgan released a report expressing disappointment in Ethereum's transition to proof of stake due to a perceived lack of adoption. Adding fuel to the fire, Ethereum's supply turned inflationary amid decreased transactions. Ethereum creator Vitalik Buterin was also observed sending ETH to exchanges, sparking concerns, although he claims no personal gains since 2018. October saw Ethereum futures ETFs listing, but they fell flat with a combined trading volume of only $2 million on the first day, compared to Bitcoin futures ETFs, which hit $1 billion in December 2021. Institutional investors continued rotating out of ETH and into BTC, with JP Morgan once again suggesting Ethereum's centralization due to staking. The Ethereum Foundation surprised the community by swapping millions of dollars of ETH for USDC on Uniswap, a move attributed to a developer grant. Meanwhile, Ethereum's validator queue nearly cleared, signaling declining interest in staking, a fact confirmed by Coinbase. Fireblocks fixed a vulnerability in ERC-4 1337, following Circle's feature leveraging the standard tested by Visa. Moving into November, Goldman Sachs expressed Ethereum FOMO, anticipating improvements in Layer 2 scalability with the upcoming Danoon upgrade. BlackRock filed for a spot Ethereum ETF, challenging the SEC's stance. Fidelity joined the party, and consensus aimed to decent big tech collaboration. Unfortunately, Ethereum's bullish developments took a backseat to concerns about Blast, a controversial layer 2 accumulating substantial ETH asset. An early Ethereum whale offloaded $90 million to Kraken, causing a ripple effect among other early whales. CoinDesk reported an increase in Ethereum's on-chain censorship, raising questions about compliance with OFAC sanctions. First things first, the buzz around Ethereum's increasing on-chain censorship got a bit lost in the excitement of Starnet, a Layer 2 solution, and Layer 0, a cross-chain protocol, announcing a token airdrop for their users. This move was likely a response to the airdrop frenzy in Solana's ecosystem. But wait, there's more. Uniswap expanded to a Bitcoin sidechain, and another Bitcoin sidechain is gearing up for launch, hinting at the potential for Bitcoin to step up its game against Ethereum. Now, let's get into Ethereum's price action. Despite some impressive gains objectively since July, ETH has been underperforming relative to its peers, especially when looking at the ETH BTC chart. Ethereum has been in a downtrend against Bitcoin, raising questions about its future performance. Could this trend reverse, or is a massive bear flag on the horizon? Interestingly, the underperformance of Ethereum against Bitcoin could be tied to interest rates. CoinDesk reported an inverse correlation between Ethereum's price and long-term interest rates in the United States. With institutional investors staking ETH to earn passive income, a decline in ETH staking yields, currently at around 4%, might be a contributing factor. The sentiment around ETH seems to have mirrored changes in the 10-year Treasury yield. But fear not. Despite these challenges, Ethereum's fundamentals remain strong. A deflationary supply, rising transactions, and record-breaking total value locked on Layer 2s signal growing adoption. So, when can we expect Ethereum to catch up with Bitcoin? It might just need a powerful catalyst. Ethereum has a game-changer on the horizon. The Danoon upgrade. This scalability boost, set to happen in January, is expected to make Ethereum Layer 2s fast and cheap, attracting institutional interest. Although Ethereum has faced its share of hiccups in the past, this upgrade could be the catalyst that puts ETH back in the spotlight. Don't miss out on the latest crypto updates. Hit that subscribe button and turn on notifications. What are your thoughts on Ethereum's journey? Share them in the comments below. It's time to shift gears and navigate through some regulatory twists impacting the Ethereum landscape. In a surprising move back in August, Bitstamp shook the crypto world by announcing it would no longer allow US users to stake ETH and would delist 7 altcoins deemed securities by the SEC. What does this mean? Well, it suggests that Ethereum staking itself is still under the regulatory magnifying glass. Hold tight, because it's not just the US facing these challenges. CoinDesk reports rising concerns about the regulations around ETH staking in the EU and the UK. Switzerland only allows ETH staking through banks, and Singapore recently put restrictions on staking services for retail users. And if you've been keeping tabs on our crypto regulation updates, you know the real storm is brewing around DeFi and stablecoins, both crucial to Ethereum's ecosystem. Now, let's talk about Ethereum's second challenge, competition. While some projects are migrating to Ethereum, there's an equal number exploring exits, like MakerDAO eyeing a Solana-based blockchain. Even institutions like Visa, after testing ERC 4337 on Ethereum, are giving Solana a shot, considering it a more viable payment rail. Ethereum's market share for NFTs is also getting nibbled at by competitors like Avalanche, emerging as a top destination for blockchain games. The paradox here is that Ethereum and its Layer 2s dominate these niches, but using Layer 2s might reduce Ethereum's own activity. If everyone is on Layer 2s, there's less ETH burning and buying on the Ethereum blockchain. The challenge lies in maintaining the balance. Ethereum's third challenge steps into the spotlight: centralization. Lido Finance, holding almost a third of all ETH staked, poses a potential risk to Ethereum's decentralization. This issue, highlighted by Vitalik in October, could lead to control through DAO governance, selecting preferred validators and rejecting unwanted ones. Despite these challenges, there's hope on the horizon. Reasonable crypto regulations, Ethereum's Danoon upgrade, and ongoing efforts to address centralization concerns are in the works. Once the spot Ethereum ETF gets the green light, the crypto landscape will face new challenges. If given the green light, an Ethereum ETF would open new avenues for institutional investment and broaden the accessibility of Ethereum to traditional finance. However, this approval could bring about new challenges, such as increased scrutiny, market dynamics, and potential shifts in investor behavior. Stay in the loop with the latest crypto insights. Hit subscribe and ring that notification bell. If you want to share the knowledge, pass this video along to your crypto friends. Until next time, and remember, the future of finance is here with KTC.